Hello everyone, welcome to our channel PH Webgan Videos. Today in this video I am going to discuss about the provisions of related party transactions, that is pursuant to section 188 of the Companies Act 2013. So this is a very important topic for examination point of view as well as for the practical point of view for the person who are pursuing CS or any other relevant courses. Also this topic is very important. So let us proceed and see what does the section tells about the related party transactions. Now, first of all, let us take a brief. As we all can see that the related party transaction, it simply means that the transaction of the company with any of its related party. Now, firstly, the question arises that who all are the related parties of the company? So I have already discussed it in detail in my earlier video. I'll be giving link of the same at the end of this video. So in that video I've already discussed that who all shall be considered as the related party of the company. Clear? So first of all we can see there in the related party definition it's the directors or the KMP or the relatives of the directors or KMP or any private company in which the director or his relative is a director or a member. So we have these kind of definition for the related party under the Companies Act. Okay, another thing it has Companies Act have also described and defined the term relatives, because the relative of director related and the KMP would also be considered as the related party. Clear? First point is to identify who all are the related parties of the company. Second important point comes here is that what all transactions are covered under this section so as to conclude it to be the related party transaction. So firstly, the company has to identify the related parties, and secondly, it has to see whether there is any transaction mentioned under section 188 that is being done between the company and the related party. Okay, then we will move forward to the approval portion that is required by the company before entering the related party transaction. So first important point is to identify the related parties. If they are falling under the definition mentioned under the Companies Act, then they will be called as related party of the company. And if they are the related party and the company is entering into any of the transaction mentioned under section 188 subsection 1, then in that case that particular transaction would be known as related party transaction, and the company has to comply with the provisions of section 188 and the rules made thereunder. Clear? So this was the briefing of related party transaction. Now, important approvals that are required to be taken before the company enters into the transaction that is known as related party transaction. So first of all, the approval is the board of directors approval. Secondly, audit committee approval. Now this approval is only required for those companies which are required mandatorily under the act to form the audit committees. Okay. Thirdly, the approval of shareholders in the general meeting. So we'll be discussing it one by one. What is the role of the company here? The company has to first identify its related party. Then it has to see whether the transaction mentioned under section 188 is being done with those related party by the company or not. And if yes, then we will move forward to the approval segments. Okay, so let us move forward and see what are the transactions which the section provides. So it says that without the approval of the board of directors, no company shall enter into the following transactions. Okay, so first of all, it seems that board resolution is mandatory. So without the consent of the board of directors in the through board resolution in the board meeting, the following transactions cannot be entered by any of the company. Okay, so first of all, the transaction includes sale, purchase, or supply of any goods or material. Secondly, selling or otherwise disposing of any property or buying of any property. Okay, so here we can see that all kind of transaction have been included. It's either sale, purchase, or supply of goods or material. It is talking about movable goods. Secondly, selling or otherwise disposing of or buying any property. So here it's talking about immovable properties. Okay. Then thirdly, leasing of property of any kind. So here even leasing is been covered. Okay. Apart from selling, buying, leasing is also covered for the property of any kind. Then availing or rendering of any services. Now what does this includes? It can include consultancy services or any other services which a company is providing or company is receiving, availing. So both are covered in the related party transactions. Appointment of any agent for purchase or sale of goods, material or services or property. Okay, so this is for the appointment of agent for these works. Another important point is such related parties appointment to any place or office or place of profit. Now what is office or place of profit? We can see in the explanation to the section which says that office or place of a profit, if the director is occupying such position, then whatever he is receiving apart from the remuneration which he is entitled to receive as a director, apart from that, over and above that, every remuneration which he is receiving either by salary or by any other perks he is receiving, then all that would be included in the office or place of profit. Okay, so another important point here is that whether to determine whether the person is holding this place of profit, and secondly what amount he is receiving. Okay, because then only we can find out the limits. But for first instance, we can see that if a person is occupying office or place of profit in a company and he is the related party of the company, then in that case he cannot occupy such position before the board's resolution or the board's consent. Clear? So here we are talking about that no company can enter these transactions with the related party before or without obtaining the board resolution. Now let us move forward. Underwriting the subscription of any securities or derivatives thereof of the company. So if there is any underwriting agreement being done or for the subscription of securities, and it has been done between the company and the related party, so first of all what is required? It's the board's approval or the consent of the board of directors through the board resolution in the board meeting. Clear? So this is the basic crux which is mentioned in section 188 subsection 1. Now let us move forward. Now another important point is when a company is not required to pass this board resolution for entering into transaction with its related party. Which transaction that are mentioned I have discussed right now. Okay, so if a company is entering into any such transaction in its ordinary course of business, that is, which is the normal course of its business, company's business, and secondly, if it is being entered at arm length price, then if both the conditions are fulfilled, then the company is not required to comply with the provision of subsection 1, that is, it is not required to pass any board resolution. Here, however, what is arm length price? Again, the explanation have provided about what the arm length price is. So arm length price is if the company is entering into any transaction with the related party, then that price which the company would have taken or given if such transaction was entered with any unrelated person. Okay, so it simply means what is the actual market price of that either property or that good or that service. Okay, so now let us move forward. What all will be the agenda of the board? Because we have seen that the board resolution is mandatory for the company except for the case if the transaction has been entered in the ordinary course and at the arm length price. Now, that board resolution agenda has to be given. Now, what does this agenda include or what does this agenda disclose? So, let us see. First of all, it shall disclose the name of the related party and the nature of relationship. Okay. Now, secondly, the nature, duration of the contract and particulars of contract agreement. Thirdly, the material terms of the contract agreement. Then, any advance if it is paid or received for that contract or agreement. Now, another point is manner of determining the price and other commercial terms, both included as a part of contract and not considered as the part of contract. So, what is the manner that it is that the company is actually using to determine the price? Okay. Then another point is whether all factors relevant to the contract has been considered or not. Okay, and if not, then the details of factor which are not considered, and along with the reason, the rationale for not considering those factor. So this is basically the disclosure point. Okay, so whether all the factors have been considered or not, and if not, then why? What is the rationale behind it for not considering those factors? And any other important information which the board feels or which it feels that it would be relevant for the decision of the board in giving the consent to this transaction. Clear? Now, let us move forward. Now, this was all about the board's approval. So, first point, we are done with it. Now, second point comes here is audit committee's approval. Now, as I have already mentioned that only those companies which are required to form the audit committee will first take the approval of the audit committee and then will enter into the transaction. And then the company will enter into the transaction with its related party. So now it says that in addition of the board's approval, there are following classes of company that requires the approval of audit committee. For what purpose? For entering or any subsequent modification of the transaction of the company with the related parties. So let us see what all are the companies. First of all, every listed company. Secondly, all the public companies having the paid up share capital of 10 crores or more. Then public companies having turnover of how much? 100 crores or more. Then public companies having an aggregate outstanding loan debenture deposit exceeding 50 crores. So paid up share capital 10 crore or more. Public companies having turnover of 100 crores or more. Again public company having the outstanding loan debenture or deposit exceeding 50 crores or more. So we can see only listed company and certain public companies are required to form the audit committee, and therefore only their approval is required if such companies are entering into the related party transactions. What are the transactions? We have already discussed under section 188 subsection 1. Clear? Now let us move forward. Now, how this audit committee's approval is to be taken? So in the audit committee's meeting, simple. However, there was an amendment in on 14th December 2015, after which it has been audit committee has been given the liberty to give the omnibus approval of the audit committee for any such related party transaction. Now, what does omnibus approval means? Omnibus approval means in bulk. Okay, it means that only one approval for all the transactions and not per transactions approval. Clear? So this omnibus approvals liberty is given to whom? Audit committee. From when? From 14th December 2015. Okay, however, certain conditions are to be fulfilled. What are those conditions? Let us see. The audit committee shall, after obtaining the approval of board of directors. So first criteria is that board approval is required. Okay, then it has to specify the criteria for making omnibus approval. Why is it giving the omnibus approval? Okay, and if it is giving the omnibus approval, then following points are to be disclosed. Okay, it has to keep in mind. First of all, maximum value of transactions in aggregate which can be allowed under omnibus route in a year. Secondly, it simply means that what is the value of the complete transaction, that is aggregate sum of all the transactions entered by a company with its related party. Then maximum value per transaction which can be allowed. Then thirdly, the extent, manner or disclosure to be made to the audit committee at the time of seeking omnibus approval. So these are the things that are required to be considered before this omnibus approval is given or is sought of. Okay, now let us move forward. it says review at such interval as the audit committee may deem fit related party transactions entered into by the company pursuant to each of the omnibus approval made. Now what this is saying, that omnibus approval, the liberty is given that the company can seek for omnibus approval from whom? From audit committee. But the audit committee has to see and has to review at regular intervals about all the transactions entered by the company and the related party, so that the company is not at a position of gaining undue advantage. Rather, the related party is not at the position to gain any undue advantage. Okay, because once the approval is given, they are allowed to enter into the related party transaction. But that is not all. The audit committee has to review it again and again. Okay, then another important is transactions which cannot be subjected to the omnibus approval by audit committee. So these are the criteria which have to be kept in mind before giving the omnibus approval. Okay, then all the factors that it has to consider while specifying the criteria for making omnibus approval. First of all, repetitiveness of the transactions. And secondly, justification for the need of omnibus approval. If it is justified, then only the audit committee will give its omnibus approval. Okay, so this is about the omnibus approval to be taken from the audit committee by the company. Okay, audit committee of the company. Then what all this omnibus approvals, this audit committee's agenda would constitute, I have not discussed it here. I'll be discussing it in the video related to audit committee. Okay, so let us see another point, that the audit committee has to satisfy itself that there is actually a need of this omnibus approval. Okay, and then only it will pass the same, because only if it is in the interest of the company, then this has to be given, this omnibus approval by the audit committee is to be given. Otherwise, what kind of approval was earlier mentioned before 14th December 2015? Per transaction approval of audit committee was required. Okay, then this omnibus's approval is valid only for 1 year, and at the expiry of each financial year a fresh approval is required. Secondly, where there is no need for this related party transaction, or it cannot be foreseen, then in that case also omnibus approval can be made, however only for the transaction where the maximum value does not exceed rupees 1 crore per transaction. Okay, so this is about the audit committee's approval. Okay, so let us move forward. Now the third point comes our shareholders approval. Now shareholders approval is required, but when is it required? We'll be seeing here. Okay, so first approval was of board approval, which is required for all the companies entering into the transaction mentioned in subsection 1 of section 188 with the related parties. Secondly, audit committee's approval is required when, if the company is having any audit committee. Thirdly, shareholders approval is required when, we'll be seeing here. So there is a certain threshold limit which is prescribed by the rules. So if that threshold limit is exceeded, then only shareholders approval is required by the company. Okay, so let us see what the threshold limit is. So the transactions are the same which we have already discussed: sale, purchase or supply of goods. So if the transaction is 10% or more of turnover or 100 crores, whichever is lower. So if the transaction made by the company exceed this limit, then what is required? Shareholders approval is required. Clear? So if the transaction entered by the company with its related party exceed this thing, which transaction? Sale, purchase or supply of any goods or material. If it exceeds what limit? 10% or more of turnover or 100 crore, whichever is lower. Okay. Secondly, for the selling or otherwise disposing of or buying of any property, then if the transaction entered by the company with its related party exceeds what? 10% or more of net worth or 100 crore, whichever is lower, then in that case what is required? Shareholders approval is required. Similarly, for leasing of property, if the transaction value exceeds 10% or more of net worth or 100 crore, whichever is lower, then shareholders approval is required. And the fourth point is availing or rendering of any service. If such transaction value exceed 10% or more of turnover or 100 crore, whichever is lower, then in that case, if it exceeds, then in that case, the shareholders' approval is required. For the appointment of any agent, so 10% or more of turnover is the limit, or 100 crore, whichever is lower. Now, another important point is such related parties appointment to any office or place of profit in company, its subsidiary or associate, and if the appointment is for more than 2.5 lakh monthly remuneration in subsidiary or associate company. So if that value exceeds this thing, then in that case shareholders approval would be required before entering that transaction. What is required? Prior shareholders approval. Clear? Now, last point is about underwriting. So if the value of the transaction exceeds 1% of the net worth, then in that case, shareholders' approval is required for the same. Now, very important point, shareholder approval through which resolution, special or ordinary? It is ordinary resolution, and from when? From 29th May 2015 through Companies Amendment Act 2015, prior to which special resolution was required. Okay, then this threshold limit is also the complete overall limit, that is complete changed limit. Earlier, that is before 14th August 2014, there were separate limits, but we'll not go into that because that is not required for our purpose. Okay, but any transaction entered before this date, which limit are to be seen? Those limit. Okay, so any transaction entered by the company before 14th August 2014, which limit are to be considered? Which were prior to this date, which were applicable prior to this date. Okay, so now another important point, that the turnover of the net worth of which year we have to take. It should be on the basis of the audited financial statement of the preceding financial year. Clear? Now, it says that if there is any wholly owned subsidiary, then the ordinary resolution, if it is passed by the holding company, then it shall be sufficient for the purpose of entering any transaction between the holding company and the wholly owned subsidiary. So in that case, wholly owned subsidiary would not be required to pass any such ordinary resolution. Holding company's resolution would be sufficient enough. Okay, another point is no member of the company shall vote on such resolution to approve any contract or arrangement which may be entered into by the company if such a member is a related party. Now, what if the person or the member himself is a related party? Then in that case, that member will not be voting on any of these resolutions. Okay, we are talking about the special resolution, so members will be voting. So if that member is only the related party, then in that case, that member's vote would not be considered. Okay, so this was the exemption given to the private companies, but apart from them, to all the companies, this is applicable. Now, first of all, it was ordinary resolution, we all know. But it is a special business. So if it is a special business, then explanatory statement is required to be annexed. Now if a special explanatory statement is required to be annexed, then what all have to be disclosed mandatorily? It is also given under the rules. So first of all, the name of the related party, then the name of the director or the KMP whom he is related to, if any, nature of relationship, then nature, material terms, monetary value, and particulars of the contract or arrangement is to be disclosed, and any other information which is important for the members to make the decision. Okay, so these are the disclosures that are mandatorily required to be given in the explanatory statement to the resolution of the ordinary resolution to be passed at the shareholders meeting. Okay, then important point here. What if this board resolution and a special resolution is not passed and this ordinary resolution is not passed and the company has entered into any such transaction with its related party? Then in that case, if the same is not ratified by the board or by the shareholders at its meeting within 3 months of the date. So how much time is given for ratification? 3 months from the date of entering such transaction. If it is ratified by the board or by the shareholder, as the case may be, then in that case there is no harm, no issue. But if it is not ratified, then such agreement or contract shall become voidable at the option of the board. So the board, if the board wants, then it can declare it to be void. Okay. So this was all for now, and I hope I have taken maximum points with respect to related party transaction, and I hope it is clear. So if you have liked my video, then please like and subscribe. My YouTube channel is PH Webgyan Videos, and do not forget to share and comment on this video, as your comments are valuable, so please do. Thank you.